Hello and welcome to another update video about XRP. So as you know, XRP wasn't really invited to the party, to the rally, which gives us a bit more clarity because it just means that the view that we had of this chart is actually correct, that we are still here in this range, that we are in a possible Elliott Wave triangle in which you would rather see just corrective movement instead of impulsive movement to the upside. So it just rather adds clarity to this chart in that it is not yet ready to rally. And overall, you know what my view about this chart is. It is a bit of a mess and it is a bit corrective. Yeah, I don't think primarily that this rally to the upside was already a breakout rally. I think we currently see that confirmed, at least at the moment. Now that view can change, especially in a market like this at some point, but at the moment, I think the view was correct that other charts are more interesting, for example, like XRP and the opportunities charts that I share with the channel members every week, for example, Optimism, we've got Aave and so on. Still, I see this chart in a way that I say a short-term upside is still possible, but we are probably not ready yet, which means this triangle isn't yet finished. So we are in the range, we are in a so-called ABCDE Elliott Wave triangle. As you can see here, wave A down, a wave B up, a C down, a D up, and an E down. These waves all have specific rules. So they need to adhere to certain rules so that the entire pattern is valid. What is interesting for us now is this particular wave D, in which we probably are, because I see the wave down here as the wave C, right, which was here the low at 42.2 cents. I would also say as soon as we break below this level, this triangle is actually broken to the downside. Primarily, this triangle should break out to the upside eventually, but not until wave E has bottomed. Has wave E bottomed? I don't think so. I think we are still working on the D wave. And let's take a look at how the wave D is unfolding. So my view is, due to this ongoing sideways movement, and I have to go to the 1 hour chart for that, just to give you an idea of the wave pattern that I expect for this D wave. Now my view is, and I have to select here the ABC. So my view is that the move to the upside from the most recent low, this was the wave C low, yeah. So we moved up in a wave A to the high at 47 cents. We then came down in a wave B and we moved up in a C. So this is a wave W. Bear in mind, each of these waves in a triangle is a corrective wave. So it's either an ABC, a WXY, or a triangle. So the ABC completed a wave W. Then my view is that this move down was a wave X and we are now in a wave Y of D. The wave X itself, as you can very clearly see, is also just a corrective wave pattern. A, B, C. And now we are in the D wave and it gets even more complex. And I mean, it is a complex chart, right? Wave A up. No. This sideways movement, very characteristic for a triangle. A B wave can be a triangle, and then we would wait for a wave C to the upside, a wave C of Y of D. Fun, isn't it? And this triangle, well, I'm not going to label the subwaves of the triangle because it's just pointless, but this is something that could unfold like this, yeah. So, and at some point you'll feel the low here, you see the low. I think this fits quite well because the low would be somewhere most likely where the support level is of this larger range. Yeah, it would fit quite well. And then a wave C to the upside. We can also give, let's say, we can calculate a target for the D wave based on the length of the wave B. So if we take the length of the wave D and we add it to the beginning of the D wave, then a key target would be the 50.5 cent level. Right, let's see, that's the 61.8 extension. That is where the wave D should ideally finish. And we can just cross-check that. If I take the length of the wave W, because there's different ways, different legitimate ways of calculating a target. And I add it to the beginning of the wave Y. Then we say one possible target is waves Y and W have the same length. That would take us to 49.3 cents, 49.4. Another target would be the 1.618 extension at 52.5 cents. Yeah. So let's see, these are two more targets that are possible, and they are all legitimate ways of calculating targets. So we just need to be, we just need to know them, and then we need to be ready, you know, when we get close to these levels. So let me just, yeah, okay. So that should be fine. Let me take out this fib. Right. And from there we should then come down in an E wave, and the E wave should be the last low in this triangle before we break to the upside. The upside potential here remains the same to what I said in previous videos. Around 78 to 80 cents would be nothing that surprises me because of the length of the wave A. Yeah, and let's see if we get there eventually, but I think it won't happen tomorrow. And the point, very important point, is that if you lose the wave C low, which is at 42.3 cents, then I think this triangle isn't going to work out, and we are going to head much lower, and probably this entire possible breakout, even though it's only a short-term, you know, breakout, because generally for me the chart trend is still down, so it hasn't really done enough to convince me that this is a bullish breakout pattern. So for me, short-term upside, yes, and then there is a risk, not a guarantee, but there is a risk that we still come down. That risk to come down is much lower on other charts. Okay, that's my update about XRP. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.